What is going on, CYPRX Advanced YouTubers? Welcome back to the CYPRX YouTube page. As always, if you're interested in learning about cryptocurrencies, commodities, indices, foreign exchange, please go ahead and consider subscribing to the YouTube channel. In today's video breakdown, I'm going to go over a live trading Zoom call that I had with the CYPRX students where I told them all that if and as long as GBP/JPY holds above the 159 psychological level, we are going to have a bullish reaction into the 159.700 to 159.800 level. All right. And I'm going to go over this trade in extreme detail. This trade yielded me $32,000. Absolutely outstanding trade. Both of these positions have now been closed in the market. All right. I was not able to catch this little tiny pullback. However, I'm going to cover this as well because we did have some CYPRX Advanced students who were able to catch this move on live Zoom call. I had mentioned to the students that I was entering down here in this area, breaking down all of this price action with them on the live Zoom call. Again, throughout the week, we have live trading Zoom calls. If you guys are interested in those Zoom calls, you're more than welcome to congregate with us on those calls. Of course, you have to be enrolled in the mentorship. That link is in the description down below. Almost every single time we hop on a live Zoom call, we catch pips together. It's absolutely amazing and outstanding. The camaraderie inside the CYPRX, advanced group is extremely well right now. And I think that it is amazing that the traders are doing bigger and better things every single day in the market. It's absolutely outstanding to see them grow. All right, so beautiful trade entry on GBP/JPY, going over the confluences that I saw in this trade. This trade was an amazing risk to reward of 1 to 11. Absolutely beautiful and outstanding. It played out to the T. What can we see? The things that I teach in the CYPRX Advanced YouTube just alone. Okay, going over number one, the higher time frame. Okay, we can clearly see that the market right now is in an uptrend, and this is on the hourly time frame. All right, so utilizing the hourly time frame, we can see that the market is consecutively making higher highs and higher lows. So we have to maintain a bullish bias as long as previous market structure lows hold. All right. Well, going down to the 15-minute with that overall bullish bias on the hourly chart, we can see institutional levels that the bank and institutions purchased from previous days. All right. So if we're looking to operate in this New York session, we're looking at the previous day's worth of price action. We can see here in this New York session going over and expanding these charts. All right. Just to give you guys a full analysis and breakdown of what it is that we see. We see that the bank and institutions from Asia purchased here. We see that the bank and institutions for London purchased in this area. And then we can see that the bank and institutions for New York purchased in this area. So these are the three main areas where the bank and institutions coming into the next day, if GBP/JPY is going to continue its bullish run, are going to be looking to purchase from. And as you guys can see, bank and institutions for New York purchased at a discount from where London session purchased from the previous day. All right, if I zoom in, you guys can see that clearly that we're having a bullish reaction to this low where the bank and institutions from purchased the previous day. So what are the bank and institutions for New York seeing in the form of price right now? They are seeing a discounted range or discounted area for them to take buy positions and add to their overall orders. All right, so if we take our Fibonacci on the higher time frame from the low significantly that took place during London, extend that up to the high and extend our Fibonacci retracement over, we can see that this is around the 79% to 70% discount on the higher time frame. Remember, higher time frame takes precedence and is king in this market. You should always trade in tandem with the higher time frame. Well, we can clearly see on the hourly that the market has been trending up. We're utilizing the hourly chart because we are scalpers, and that is going to give us the best price information in my personal opinion. But we can clearly see that since around March 7th, the market for GBP/JPY has been in an uptrend. All right, so we're going to be looking to take buy positions to situate ourselves on the right side of the market in order to catch the best moves to give us the best risk reward ratios. All right, so having that mindset coming into this market now on the lower time frame, we've done the higher time frame analysis. What can we see based off of what it is that I teach you guys on the YouTube channel? Okay, we see what prior to 8:30 a.m. if we draw our manipulation window from 8:30, all right, and we extend that over to around 6 a.m. Okay, boom, we can see that this is a manipulation window, all right, where we can see that early buyers and early sellers exist in this region. And we're going to highlight all of the price action here. All right, so highlighting all the price action in this area, we have liquidity targets and points of interest where the market makers are going to most likely react to. All right, now what can we see? We see early buyers in this region here, right beneath these lows. Now we also see early sellers in these highs here, above these highs, okay? And that all takes place prior to 8:30 a.m. So what does the market do? Now going into detail, in extreme detail, aside from order block theory, aside from Wyckovian theory, this is where Wyckovian theorists would say, okay, this is a sign of strength. This is most likely some type of spring. This is a test of that spring. And then price reacts, jumps against the creek and blah, 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 blah. Then we have a break instruction and they be labeling all of this stuff. You don't need to know all that, guys. You don't need to know all that. All you need to understand is that price information was telling us that we are are looking to have a bullish reaction. We see a psychological level that leads to a market impulsive move that breaks previous market structure. So we can identify this, okay, taking our indicators off so that way they don't confuse anybody. All right, we can see that this is a new structural high. Okay, this high right here, regardless if you want to fight it or not, created a new market structure high. Now look at this. Okay, we can change this now to a BOS top, all right, or a break in structure. So we have a grab of liquidity beneath this low here, where we can see this was inside the 8:30 a.m. region. I'll identify 8:30 for you guys right here with the vertical line. Okay, so any movement prior to this 8:30 a.m. region is manipulation. We can see institutions manipulated early buyers by printing a bullish candlestick, right? Bullish candlesticks on baby pips, people are going to be chasing this, okay? The market makers liquidate those orders, activate sell stops, and tap into liquidity. So we can take this, our little box tool where we identify liquidity with, boom, okay? We can see this as a grab of liquidity. This is exactly what I teach you guys on the YouTube channel, and it leads to a market break in structure. So now we have a new A to B move. So if we're going to be looking to get in on the moving trend, we need to do what? We need to wait for a discount. Why? Because now we know that the market makers have an interest in buying at this price, okay? So if they're going to look to add to their orders, they're most likely going to do it at a discounted price. They're not going to buy at a high, right? They're not going to buy up here in this area. That's wrong. You don't want to do that. What you want to do is you want to formulate where discounted price most likely is going to be, and that is where our Fibonacci tool comes in handy. So we're going to be looking to take our fib from the most recent higher low, which is right here. Again, zooming in, the most recent higher low after the liquidity grab, taking it from the low to the high that broke structure and extending that over. And we can clearly see where my discounted entry was at around the 100 to 85% discount right here in this area. We see a market reaction. Now, while we were on the Zoom call, I had said to the students, okay, I might have entered a little bit too early. Why? Why might I have entered a little bit too early is the question. And how can you manage the trade once you're in? Remember, trading isn't just about trading and making money. It's about how you manage the trade when you're in it. It's about having an exit plan in case your trade goes against you. And it's about having a formulated area as to where you're going to properly take profits from if the trade goes in your favor. So that way you can actually make money and protect your capital in this market, right? So when the market rallied from this high, I told the CYPRX students, especially the ones who missed out on this entry, that because we did not break previous market structure here in this area, where we did not see this market impulsive move create a new structure high, we were most likely going to see a pullback, and we got that. This is the banking institutions adding to their overall order, adding to their overall position from this discounted buy here that they got on the higher time frame, okay? Remember that the banking institutions can't just flood the market with all of their money all at once. That would be an insane candlestick. That's not realistic. That is not how it happens. I've attempted to teach you guys on YouTube, and I attempt to teach the CYPRX students that the market makers have to add to their positions. So when you see these pullbacks of these impulsive moves to the downside, this is manipulation by the market makers so that way they can add to their overall bullish position. They added to this position here. That's one add. They added to the position again here. That's two. They then added to the position again. That's now three. So they added to their bullish thesis and their bullish movement in the market, not once, but twice, 3 and 4 times to move the market in their overall favor, in the overall direction, the path of least resistance, all right? So this was a beautiful risk to reward ratio of 1 to 11, outstanding, yielded $32,000 on this trade. All right, now coming into this area here, same principles, same concepts that I taught in this area. How could you have caught this move over to the right-hand side? Okay, looking at this price action here in this entry, what can we see down here? This is what you need to pay attention to. This is the most prevalent area of price action that you need to be mindful of. Look at this, okay? What do we see? We see the market show us a willingness to dip beneath lows. Let me get rid of this buy position. We see the market give us the willingness to dip beneath lows here, okay? So we can identify this as liquidity, right? And then show us a willingness to go higher and break previous market structure. So now same thing that we did over here where this market broke this market structure high, we can see the same pattern here. We see this market structure break previous market structure highs. So now we have a new what, guys? A new A to B move. If you wanted to get in on this moving trend to the upside, all you would have done is take your Fibonacci from this low, and I told the CYPRX students on the Zoom call, most likely we were going to see a bullish pullback, right? Or a bearish move that entices people to sell because they think that this is a lower high, but realistically speaking, it's just the banking institutions creating liquidity to take the market higher, right? Why? Because we've already identified that we have a bullish move here. We've identified that on the hourly chart, which takes precedence, that we are bullish, okay? We also see a psychological level rejection, a grab of liquidity to the downside, and the market showing us a willingness to go higher after taking liquidity from lows, okay? This is all showing us bullish sentiment around this trade. So all you would have needed to do, again, is take your Fibonacci from the low to the high that broke structure once we started to pull back, and we see a 62% discount. There was another entry on GBP/JPY that happened on the live Zoom call, and again, yielding a 1-to-4 risk to reward ratio. We look for 1-to-3 on CYPRX at a minimum. This would have been a beautiful trade execution. Most likely the traders are still floating in this trade. Again, showing you guys the Discord, showing you guys that we attack the markets every single day. Beautiful execution, absolutely outstanding. I hope that you guys enjoyed this video breakdown covering early buyers, early sellers, liquidity in the market in the form of buy stops, sell stops, understanding how price fluctuations and impulsive moves affect the market, and being able to react to them at psychological levels is crucial and key. If you guys are watching Wyckovian theory, if you guys are watching order block theory and it is not working for you, consider joining the mentorship. I promise you guys that some of the stuff that I give to the CYPRX Advanced students will give you clarity in the market and how to read price action properly. Aside from order blocks, aside from Wyckovian theory, aside from support and resistance, there's still so much in the market that you need to learn that is not available for you all on the internet, and it's not available for you in any trading book. All right. Blessings to you guys all. Again, I do appreciate the love and the support that everybody has shown to this YouTube page. If these video breakdowns are helping you out, make sure that you subscribe to the YouTube channel and make sure that you like this video. It does help boost the YouTube algorithm. I do appreciate anybody that does share these videos to outside sources. All right. It would be outstanding to see this, YouTube channel grow significantly in the future. I really do appreciate it. As always, you guys take it easy, be cognizant, be aware, and I'll see you guys in the next video breakdown.